It is 8:15 a.m. Pacific Daylight Time. It is the 27th day of May, 2026, and this is episode 1329 of Bitcoin. And there's all kinds of crazy shit going on, and nobody knows nothing. And I'm going to tell you all about it here on the Bitcoin and podcast. I am your host, David Bennett, bringing you all the news that you can use about Bitcoin and macro from around the world. Seeing a sell-off in Bitcoin this morning, as we did yesterday morning, and I think many people are trying to figure out why, because the macro environment is weird, right? We got the Strait of Hormuz, we got, I guess, a Iran peace deal on the table that they're working on, and yet we dropped some bombs during this peace talk / ceasefire. And yet oil, while it did raise a little bit back up on the news that we had committed some Iran strikes, it's fallen well below where it's been for like 5 weeks. I think we're at a 5-week low on oil. We've got interest rates on United States Treasury bonds falling as well. Now, you would think that that would give Bitcoin a bit of a boost, but it's not. So what else is going on in the world that might explain why we're seeing this particular drop in Bitcoin? And I got a theory. I think it's because people are needing liquidity to buy into the SpaceX, OpenAI, and Anthropic IPOs. I think that, and DRAM, by the way, DRAM. That's that Round Hill ETF, which has now become the fastest growing ETF in the world. It surpassed Bitcoin a couple of weeks ago on that front, and it is screaming higher. So I think people are looking for liquidity because there's just not a whole lot of liquidity out there right now. You got people buying back into the stock market. NASDAQ, S&P are both near their all-time highs. And then you've got the Dow, which is, kind of cratered along with Bitcoin, but it's starting to come back up as well. So there's not a whole lot of liquidity sloshing around to be able to buy in to these new IPOs that are coming out. And I think that that's what's going on. I think liquidity is being sucked out of Bitcoin because people want hard cash to be able to purchase the SpaceX IPO, which is most likely going to be first one out of the gate. And I heard a report the other day that said when you have stacked IPOs, that the first one out of the gate gets the lion's share of the money, and then whoever's last may not get anything at all. And I do not think that this is going to be the case here. You got SpaceX, you got OpenAI, and you got Anthropic. People want all three of those. So this is a triple whammy on everything, honestly. It's not going to be just Bitcoin that's going to sell off. People are looking for anything that they can to sell so that they can get cash because they don't want just the SpaceX IPO. I guarantee you they're going to want OpenAI, and they're also going to want Anthropic, and people are screaming for this DRAM ETF, which is what it sells is exposure to the price of companies that build and sell semiconductors, whether it's GPUs, CPUs, but also RAM. That's why it's called DRAM, at least I think. Because memory is a hot item right now for all this AI stuff. So two of these IPOs that are coming out are the guys that actually buy the things that DRAM represents. So what we got here is a black hole of liquidity. And I think that that's really the main story behind why you're seeing some of these other things fall in price. And we've got this lead story here about the dark pool ETF sale. Yes, and we're talking about the IBIT BlackRock Bitcoin spot trust thing. There was a huge sale that was made yesterday. I don't think it is what we think it is, but let's start with Braden Lindria talking about it from Cointelegraph. Bitcoin's recent drop coincides with $1.3 billion dark pool ETF sale. So let's see what this is about. An unknown trader's $1.3 billion sale of shares in BlackRock's Bitcoin exchange traded fund on Tuesday coincided with a steep fall in the price of Bitcoin. A trader sold 29.2 million shares of BlackRock's iShares Bitcoin Trust at 2:30 p.m. UTC on a, quote, dark pool. That's a private trading platform that institutions often use to discreetly make large trades outside of public markets. The impact of the $1.3 billion trade was immediately felt in the crypto market, with TradingView data showing that Bitcoin fell 1.5%. Bitcoin then slid further to a 24-hour bottom of 75,600 about 12 hours later, marking a 2.8% fall for the day. Bitcoin has historically been viewed as an asset that trades outside of the traditional market, but products such as US-based Bitcoin ETFs have removed barriers for institutional investors to trade Bitcoin, and the cryptocurrency is recently traded in high correlations with US markets. Alex Thorne, head of firm-wide research at crypto investment firm Galaxy Digital, said in a post to X that it was the biggest trade he has seen made through a dark pool. Bloomberg analyst Eric Balchunas also shared that the 29.2 million IBIT shares sold at $43.16 was over 22 times larger than the second largest IBIT sell order on Tuesday. U.S. spot Bitcoin ETFs have now recorded 8 straight trading days of net outflows, with a $333.6 million outflow on Tuesday alone, including a $192.4 million outflow from IBIT. More than $2 billion has now flowed out of the ETF since May the 14th, the last recorded net inflow across all the funds, and that's a sign that institutional sentiment towards Bitcoin has weakened, with investors reducing exposure to Bitcoin ETFs at a rate faster than fresh capital flowing into the market. Institutional market maker Jane Street reduced its Bitcoin ETF holdings by around 70% in the first quarter, while investment bank Goldman Sachs reduced its Bitcoin ETF positions by 10%. All right, so that's that article. But there's a weird trading thing that I saw on IBIT. I'm pulling up the chart right now. IBIT. Let's get to where you are. Okay. On Tuesday, May the 26th at about 6:30 a.m., I saw, and this is not on the dark market. Okay, this is, let's see, where is this coming from? This is coming directly from NASDAQ iShares Bitcoin Trust hourly chart. So at 6:30 a.m. my time, Pacific Daylight Time, there was a massive buy of IBIT. Again, remember, I'm not talking about the dark market. There was a $1.14 million share buy, and not just one buy. This is just this hourly candle at 6:30 a.m. 1.14 million shares were purchased in total. The next hourly candle shows that 1.19 million shares were sold. So what it looks like to me is that somebody ran up the IBIT market and then immediately sold. I have no idea why. Now, again, for the third time, I'm not looking at the dark market sale. I'm looking at, I guess, what would be a reflection in the dark pool that is where the sale was made. But still, there's something about this that kind of, it seems weird, because that spike up is just as large as the spike down the very next hour. But nobody's talking about this massive purchase of IBIT, which basically kind of dwarfs most of the other buying candles that I've seen in the last few weeks. Now, I don't know what that means. I wish I did. I wish I could tell you exactly what that means. I can't. It's just that I find it a little odd that nobody's really talking about this spike up at 6:30 in the morning on IBIT. So take that however you want. But let's move on. I got a small snippet here that Fold, the guys from Fold Bitcoin, Fold gets a $150 million credit facility to scale Bitcoin Rewards credit card program. And that facility is led by Encina Lender Finance, and it goes up to $150 million in this credit facility. That seems like quite a bit of money right now, especially considering that we're we're still in this bear market. I wish I had better news for you, but we've never gotten out of the bear market. It's still here. It's still with us. The bears are shitting all over everything and not much we can do about it. So I just find it interesting that Fold is getting a $150 million credit line to scale their Bitcoin credit card rewards program. I think that that's actually kind of good news. It means it's like, well, we're not all in the bearish sentiment right now. Now on to IREN. IREN, Bitcoin miner, their shares jump on a $1.6 billion Dell deal. That would be Dell Computers to expand AI cloud business. This is out of CoinDesk. It's written by James Van Straten. IREN shares rose 4% in pre-market trading after the company entered a $1.6 billion purchase agreement with Dell Technologies for air-cooled Blackwell systems, a major step in scaling its artificial intelligence infrastructure. The new systems will support IREN's previously announced 5-year, $3.4 billion managed services AI cloud contract and are expected to be deployed across the company's existing data centers in Childress, Texas. Commissioning is targeted for early 2027. Once operational, the AI cloud contract is projected to increase IREN's annualized run rate revenue from $3.7 billion to $4.4 billion, reinforcing the company's position as a growing player in AI infrastructure and cloud services. Co-founder Daniel Roberts said speed and execution remain critical in the rapidly expanding AI market. Quote, securing capacity and accelerating commissioning are our top priorities in a market where time to compute is everything. Our relationship with Dell ensures access to hardware at the scale and speed that the market demands. The agreement highlights increasing demand for AI compute capacity as hyperscalers and others race to secure infrastructure. So the interesting thing here is that it's Dell. Because as far as I'm concerned, this is the first time that I've really heard Dell Computers or Dell Technologies as being a player in what is going to be the AI infrastructure future, at least for the time being, because I do think that I do think that AI is going to enter a bubble. We're definitely already in a bubble, but I think it's going to expand well beyond the boundaries that we see right now before that son of a bitch pops. So what happens when it pops? Well, lots of people are going to lose a lot of money because they got in late or whatever. AI is still not going away. It could be worse than the dot-com bubble, and AI is still not going to go away. It'll be reformatted in the way that it's used, because now there are reports that there are several companies that are figuring out that it costs more for less people to use AI than if they had just hired humans to do the work in the first place. As to the efficacy of that report, I don't know yet. We'll see. More data needs to come in as to whether or not that those reports are actually true or close to true. But in either event, it's just going to reformat the way humanity uses AI. I think right now, it's very possible that a lot of people are burning tokens for no real value at some of these companies. Like maybe they're like burning a company token to make a recipe for dinner that night. Maybe it's not all about what they're supposed to be doing. Maybe they're making frivolous, they're writing frivolous prompts. Who knows, right? Who knows? Still, though, I think what'll happen is that there is a cost to all this. It probably is a situation where it's a little bit more expensive than these people thought, and maybe they shouldn't have fired all these people. But if the if the AI bubble pops, or rather when it pops, I think what you'll just find is that people are going to work really hard to understand how to be judicious with the use of artificial intelligence at their workplace, at their homes, on their phones, that kind of thing. But AI is not going to go away. So bubble or not, it is what it is. Still, though, Dell, this is the first time that I've heard Dell Technologies stepping into the ring as far as huge contracts of AI are concerned. All right, all of this is kind of making me a little hungry. Sats4snacks.com. That's Sats4snacks.com. You got to go there and get yourself some freeze-dried pineapple, freeze-dried peaches, freeze-dried organic mangoes, of all things. I love the mangoes. And you get 2.1% off with coupon code Bitcoin and. That's coupon code Bitcoin and at Sats4snacks.com. Get 2.1% off at Sats4snacks.com. That's Sats, the number 4, snacks.com. He's also got, what else has he got? Oh, he's got organic freeze-dried bananas and organic freeze-dried strawberries. Now, the strawberries, once you eat a freeze-dried strawberry, not a dehydrated strawberry, a freeze-dried strawberry, because there is a huge difference. Once you taste it, you'll know what the difference is. The freeze-dried fruit that Sats4Snacks sells, the flavor is completely contained. That is not true when you dehydrate fruit. Something about the dehydration process saps the flavor. I don't know why, and I don't care. All I do know is that the freeze-dried version of dried fruit is superior to dehydrated fruit. Doesn't mean that I won't dehydrate fruit in the future. It just means that it kind of makes me wish I had a freeze dryer myself. Go to Sats4snacks.com. That's Sats4snacks.com. Make sure that you use Bitcoin and as a coupon code, not only to get 2.1% off of your entire purchase, but it lets Sats4Snacks, that would be Permanerd. That Permanerd is my friend. He's the guy that runs Sats4Snacks. It lets him know that I made him a sale here on the Circle P, which is where I bring plebs just like you with goods and services to plebs just like you who want to buy those goods and services. But you will be buying it in Bitcoin, because if you're not selling it in Bitcoin, you're not in the Circle P. All right, speaking of AI, let's get back to this little notion here. Yesterday, I talked about the Pope's encyclical, and that it's more important than I think a lot of people are aware of. Well, the Pope, or at least the Catholicism, is back in the news when it comes to AI. From Jason Nelson out of Decrypt, AI chatbots show bias toward Catholicism, according to researchers. Interesting timing for this report to drop, is it not, considering we just went over the encyclical? Leading AI models consistently showed a positive bias toward Catholicism in conversion-related questions while steering users away from other faiths, according to a new multi-university benchmark released on Tuesday. The research comes from the newly formed Consortium for Evaluating Faith and Ethics in Artificial Intelligence, a collaboration between Baylor University, Brigham Young, the University of Notre Dame, and Yeshiva University. The group released the first results from its all-faith benchmark on GitHub and at the Athens Summit on AI Ethics, arguing that religious bias remains largely overlooked in AI safety research. Quote, "We are seeing a systematic pattern of religious omissions," BYU professor David Wingate said in a statement. Quote, "AI systems encourage users to discuss life's challenges with their parents, teachers, friends, and therapists, but not with a pastor, a rabbi, an imam, or a spiritual leader," end quote. Researchers analyzed 3,640 responses across 20 AI models, including ChatGPT, DeepSeek, Claude, Gemini, Grok, and Llama, and found clear patterns in how the systems handled religion. According to the study, nearly every model responded more positively towards Catholicism, with a 61% encouraged rating and more negatively toward Jehovah's Witnesses at 3%. The mainline Protestant religion received a 49.2% rating, while evangelical Protestants received 34%. However, agnostic, the belief that it is impossible to know whether God exists, scored better than every religion tested with a 71% encouraged rating. Many of the models also responded negatively towards atheism and agnosticism, while giving more favorable responses to Baha'i and Sikh beliefs. Grok 4.2 showed the strongest religious bias in the study, with a 69% and 51% positive rating toward Catholicism and evangelical Protestant, respectively, while Grok 4.2 skewed towards Christianity in the study. The XAI chatbot, along with DeepSeek Chat version 3.1, were the only AI that gave Jehovah's Witnesses more than a 5% positive rating. The release comes one day after Pope Leo the 14th published Magnifica Humanitas, the first papal encyclical dedicated entirely to artificial intelligence. In the encyclical, Leo argued that technology is never neutral because it absorbs the values, blind spots, and economic incentives of its creators. Quote, "Data is the product of many contributors and should not be treated as something to be sold off or entrusted to a select few," the Pope wrote. Despite the growing focus on AI by religious leaders, the consortium said religious bias remains largely overlooked in AI research, with only 0.2% of more than 12,000 AI biased papers examining religion-related biases. Quote, "Our expectation was that the conversion benchmark would show models to be neutral and symmetrical in their guidance," Nancy Fulda, a professor at Brigham Young University, said in a statement. Quote, "The results show significant and repeatable positive and negative biases toward certain belief systems." That's the end of the article, but I got something to say about this. The timing is really odd to me. Something, I don't know, man. I smell something. I don't know if it smells bad, good, or indifferent, but I smell something here. This came right after the announcement of the Pope encyclical and everything that we talked about yesterday. And all of a sudden, now it's the AIs, most of the models have a bent toward Catholicism. I'm not going to tinfoil hat and say that the Catholics are trying to take over AI. I think that that's probably going to be a narrative that you hear, just like the Jews run America or whatever this bullshit is. I'm not going to buy it. I don't think that that's what this is. However, when I'm not listening to what the Pope says when he said the following. Let's see, where was it? It's here somewhere. Leo argued that technology is never neutral because it absorbs the values, blind spots, and economic incentives of its creators. Okay, so is it possible that there's more Catholics in AI development than there are in other religions, and somehow those biases got into the AIs through whatever it was they selected to train them on? But I don't think that that's true either, because as we know and have known for a long time, these companies were scraping anything that they could to be able to train their AIs. Reddit was pissed because their entire website was basically scraped. Like, all subreddits were scraped. You know, like last year or the year before last, when some of these earlier models started coming online, they were being trained up and down by anything that these guys could get their hands on. So maybe what it is that these biases came through that, because they were scraping everything. And maybe what this is representative of is that Catholicism is well over 1 billion people worldwide, and most AI came out of the West and not China. I mean, DeepSeek is definitely Chinese. Yes, they're working on it. But most of the models that are frontier models that are being used today were developed in the West. And I kind of think that that's where all this shit is coming from. What does it mean for AI? I don't know. For me, I would not be looking to AI for religious training or some kind of spiritual anything, really. You got to take AI with a grain of salt. It is an extremely useful tool. But I don't go to my toolbox and grab the hammer and say, what do you think about Jesus Christ? Let's run the numbers. Futures and commodities, and we've got a bloodbath in energy again today. Brent North Sea down almost 4 points to 95.76 a barrel. West Texas Intermediate down 4 points to $90 and a dime. Natural gas is the hedge today. It is up 3.25% to $2.98 per thousand cubic feet. Gasoline down 2.5 to $3.14 a gallon, and Merbon crude is down 3.7% to 91.48. Metals are having a bad day. Gold is down 1.4% to 4,438 and 9 dimes. Platinum is down 1.5%. Silver is down 2 1/3. Copper down 0.8%. Ag is mostly in the red today. Biggest winner are soybeans, 0.36% to the upside. The biggest loser is sugar, 2.5% to the downside. But livestock futures are screaming. Live cattle up 1.75%. Lean hogs up 1.8%. And feeder cattle also up 1.8%. Legacy indices are basically moving sideways. S&P is down scant. NASDAQ is down 1/3. The Dow is up 0.4%, and the S&P Mini is basically sideways as well. And then there's Bitcoin at 75,000, basically 75,000 even. $1.5 trillion market cap, and we can only purchase 16.9 ounces of our favorite shiny metal rock with our 1 Bitcoin, of which there are 20,035,001.15 of. Average fees per block are high, 0.03 BTC taken in fees on a per block basis. It's about 50 blocks carrying 121,000 unconfirmed transactions waiting to clear at high priority rates of 4 sats per VByte. Low priorities will get you in at 1. Hash rate has dropped below zettahash territory. We are back to 987 exahashes per second, and still I am not concerned at all. A reminder to go to bitcoinandshow.com, visit the website, and you'll find lots of the episodes with small write-ups, a little bit of artwork, try to make it a little pretty for you guys. And the Cathedral series of podcast has its own page. If you look at the top, you'll see Home, About, The Circle P, and Cathedral. Click on Cathedral if you want to learn about the thought experiment I got going on in my little bitty head. And from yesterday's episode entitled Burn Address, I got Oak Grove with 3,900 sats. Dude, thank you. He says, why in the motherfuck does the director of the FBI have a fucking merch store? All right, found the next white elephant item for the next meetup. LOFL. Nick Dose with 220 says, cheers. Noster Gang with 101 says, thanks. No, thank you. And Oak Grove with another 100 says, also, the article you read didn't materialize after clicking on it. My apologies for that. Not sure how that link got broken, but, you know, it is what it is. If you want to support the Bitcoin and Show, please do so by, you know, the best way to do this is Podcasting 2.0. Go get Fountain app. It is my daily driver for all my podcast usage, and you can stream Satoshis. And if you stream like 10 sats per minute, you know, it's like I think it's like, what does that end up being? 600 sats total for the entire hour. It's actually not that much money, but if I can get a lot of people doing it, yeah, man, it adds up. If one or two people do it, it's, you know, not so much. But if I can get a lot of people that listen to the show to move over to a Podcasting 2.0 enabled app and set streaming to on, and, you know, for Fountain, a minimum streaming, you got to do 10 sats per minute. But I try to keep these shows to like 60 minutes. So, you know, just like if you would, I would appreciate streaming sats. I love seeing them because it really, really highlights the Lightning Network and what it can do. So go get a Podcasting 2.0 app. Most of them have sats enabled, you know, Bitcoin enabled, and it's just the best way to support this show. That's the Weather Report. Welcome to part 2 of the news that you can use. TeraWulf acquires 1 gigawatt Kentucky AI data center site. Their shares jump 11%. Micah Zimmerman from Bitcoin Magazine. TeraWulf Incorporated announced Tuesday the acquisition of a hyperscale data center development site in eastern Kentucky, a move that sent shares climbing 14% at times over the course of the day as investors responded to the company's deepening push into artificial intelligence. The new Muskie Data Campus, purchased from Industrial Equity Partners, sits within the 1,000-acre East Park Industrial Park in northeastern Kentucky and encompasses 285 acres of owned and controlled land. The site is expected to support more than 1 gigawatt of AI and HPC capacity, enough to power approximately 750,000 homes. The first 500 megawatts is targeted to come online in the second half of 2028, with an additional 500 megawatts set for delivery by the second half of 2030. Kentucky Power, an AEP company, is constructing a 345 kilovolt substation connected to an existing 765 kilovolt transmission network to serve the campus. Transmission infrastructure and energy service agreements were executed at closing, establishing what TeraWulf described as a clear pathway to long-term, large-scale power delivery. The site is zoned for its intended use, with permitting underway. Quote, the defining constraint in this market is no longer compute hardware, it is power, transmission infrastructure, and execution certainty, said Paul Prager, TeraWulf's chairman and CEO. Quote, Muskie combines scalable power, robust transmission infrastructure, development readiness, and strategic regional positioning in a way that is difficult to replicate, end quote. The acquisition marks TeraWulf's second major digital infrastructure campus in Kentucky, joining its 480 megawatt justified data campus in Hancock County. The company bills itself as a power infrastructure company that builds digital infrastructure. Yeehaw! A distinction Prager said underlies TeraWulf's ability to secure sites like Muskie ahead of competitors. The deal arrives as TeraWulf's HPC-related revenue surged 117% in the most recent quarter, driven by its Western New York Lake Mariner facility, one of North America's largest HPC campuses. AI compute revenue outpaced Bitcoin mining revenue for the first time in the first quarter, though the company posted a $427 million net loss, as infrastructure investment spending climbs. A $3 billion financing package arranged through Morgan Stanley, with Google backstopping the debt, is funding the data center expansion strategy, and that was announced last September. Wolf shares rose as much as 13.6% in early New York trading on Tuesday before settling to an 11% gain, reaching nearly $26 per share. That's their highest level in roughly 3 weeks. So, this AI thing is definitely not going away. I do think we are in the middle of a bubble expansion. I do think at one point the bubble's going to pop, but nobody knows when. And here, what we're looking at is a gigawatt infrastructure. Half of that power will not come online until the middle of 2028. Was it the middle of 2028? Let's see if I can find that again. Yeah. Second half of 2028. So that's 2 years away. And then the other half is planning to come online 2 years after that. So is it possible that we could start seeing, okay, when does the bubble actually pop? Can we look at these particular timelines as it won't pop until at least after 2030? Things of that nature. I would not do that, but I do think that there's a couple of years left on this run. And hell, there may be at least four or 5 more years left on this run. Who knows? But one thing is for certain. Nobody is talking about the power consumption of AI. They did with Bitcoin. I mean, they went whole hog on all of it. They were talking about how much power Bitcoin used, how much water Bitcoin used. Now the only thing that we hear about as far as these AI data centers are concerned really is the water thing, which does, kind of make sense. They do use quite a bit of water, and that water does get evaporated. It's not like, they're sent to cooling towers or the hot water is sent to some kind of cooling situation and then it's recycled. But eventually that water ends up evaporating in the cooling system. And if they're using like evaporative cooling towers, then there's a lot of evaporation that's going on with this water. So it's going up into the atmosphere and not necessarily being returned all that much to the drains. It depends on the data center. It depends on how they're cooling their stuff. But nobody's really all up in arms about a gigawatt being taken offline for AI, and it could be used to power 750,000 homes in the region of Kentucky. So why? Why is nobody up in arms? Why is AOC continuously focused only on the water issue, which she's wrong about? She's wrong. Like, she held up like this jar of dirty water. That's not what's going on. As far as the water's concerned, that she's on the wrong track. She should be talking more about just water loss, not water quality. So she's even got that wrong. She hasn't said a freaking word about how much energy this shit uses. So I have to ask myself questions as to why was Bitcoin being raked over the coals about energy usage when it uses a fraction of what AI is using? And I don't have an answer for that shit either. I wish I did. But let's move on to Trump. Trump has joined the CFTC fray over prediction markets, and he literally called state officials scum. This is Vince D'Aquino out of Decrypt. U.S. President Donald Trump pressed Tuesday for federal regulators to keep control over prediction markets, calling it a critically important issue as states move to treat the fast-growing sector as gambling under their own laws. Quote, "We cannot have scum like Chris Christie, Letitia James, Tim Walz, and J.B. Pritzker setting the rules," Trump wrote on Truth Social, adding that the CFTC's exclusive authority should be maintained as other countries pursue what he called a new form of financial market. Prediction markets should thrive under federal rules of the road, Trump said, arguing that other countries are pursuing the market and tying the issue to his broader push to keep crypto activity in the United States. Trump's stance on prediction markets has shifted over recent months. In April, the president stated he was never much in favor of prediction markets and said they helped turn the world into somewhat of a casino. Asked days later whether his administration would change its position, he said very smart people backed the sector and that the United States could be left out in the cold if other countries move first. Quote, "A lot of other countries are doing it, and when the other countries do it, we get left out in the cold if we don't," Trump told Decrypt. Prediction markets let users wager on outcomes across crypto and traditional markets, et cetera, et cetera. The sector has grown quickly over the past 2 years and is projected to reach $1 trillion in market volume by 2030. Federal prosecutors treat prediction markets as event contracts overseen by the CFTC, placing them under derivative rules rather than gambling laws set by individual states. State officials have sought to apply gambling laws to prediction market contracts, including through cases against Kalshi in Arizona and Nevada. The Trump administration has responded with lawsuits asserting that state attempts to ban prediction markets illegally interfere with federal authority. Trump's statements on Wednesday tied the dispute to the CFTC's current rulemaking work, praising Chairman Mike Selig as doing a great job. Selig has called for a framework that would bring exchanges onshore, warning that failure to create clear U.S. rules could push activity overseas. Okay, so Trump has thrown his hat in the ring personally, backing the federal government's exclusive authority over prediction markets. So who called up Trump and said, "Hey man, I need a favor. I need you to get on the side of Kalshi and Poly Market and the rest of these prediction markets," because he clearly has. And once Trump starts calling people scum, you know his feet are firmly planted in whatever soil him and his friends are standing in. I mean, I don't think he's going to budge from this one. My problem, as always, is that I kind of think this is a 10th Amendment issue. And by the CFTC saying, no, this is derivatives market stuff. This isn't gambling. It's not, so it can't be classified as gaming. So therefore, this falls under, I don't know, find wherever it is in the Constitution of the United States. Maybe it's the Interstate Commerce Clause or whatever. I don't know. I'm not a constitutional expert. But by basically redefining these markets as under the purview of derivatives, I suppose, by giving it that moniker, the federal government is able to abscond with some of the rights afforded to the states by the 10th Amendment. I don't like that. I think states should be able to say, no. You're not going to force us to keep this kind of thing open. We don't want our residents gambling on this stuff. Yet most states have a lottery. So there you go. I think maybe it's protectionism on the states' part. Maybe they want, like, for the states that don't allow gambling but do have a lottery, which is most states, maybe they want to protect their lottery. Maybe that's what it is. I don't like lotteries either. It's all gambling. When you get right down to it, this is all gambling. It's all gambling. It's all gambling. I got a couple of notes here from Bitcoin Plus Plus in Vienna. Their economics edition is started today, May the 27th, and goes through tomorrow, May the 28th, at Weißstadt Kobenzl. I cannot pronounce this town's name, with developer discussions focused heavily on Bitcoin scaling. And Rene Pickart basically has a core thesis. He's talking about Lightning and Arc. Now, his thesis is that people have been thinking that Lightning and Arc are very, very different, and that Arc, maybe it's there to replace Lightning, maybe it's Lightning versus Arc, but he's saying that it should be thought of as Lightning and Arc. Lightning and Arc solve different problems and are better understood as complementary protocols, he said. Instant, high-frequency, low-value payments from Lightning is its strength, and it happens between active users who already have channels and liquidity. But Arc's strength is easier onboarding, receiving payments without channel setups, batch settlement, UTXO sharing, and it has improved privacy. Arc uses virtual UTXOs or VTXOs, which are pre-signed off-chain transactions that allow users to receive Bitcoin without opening a Lightning channel or needing any inbound liquidity. Together, and this is again Rene Pickart, he's saying that together, Lightning and Arc creates a stronger scaling stack. Lightning handles speed and routing, while Arc handles onboarding, receiving, batching, and UTXO management. And I like what Rene is saying about this, because I personally kind of never saw Lightning as a Lightning versus Arc situation or Arc versus Lightning situation. I don't know. I didn't really kind of think of how they were going to be complementary. I was more thinking of it along the lines of, for those people that don't want to get into Lightning, you can still kind of use Lightning with Arc. But them together, plugging them into each other, is if people start literally building like a Lightning/Arc wallet that has a stack of Lightning and Arc, where it's like you could just either switch between the two, or somehow or another, everything is handled in the background, and it's just, whatever QR code that your phone scans, the Lightning wallet or the Lightning/Arc wallet just determines, hey, for this one, Lightning's the way to go. Oh, but for this one, Arc is the way to go. And it's all handled in the background. It's all about user experience and making it just dead stupid and dead simple to be able to use this stuff. That's where adoption happens. So Bitcoin Plus Plus going on in Vienna right now, and it's really neat that they're talking about Austrian economics in Austria. But that's not going to help DeFi. DeFi isn't safe anymore because AI is becoming superhuman at hacking, according to a security chief, Sam Reynolds, writing for CoinDesk. Open Zeppelin CEO Manuel Araz said he now considers all of DeFi, decentralized finance, unsafe, because coding agents have become superhuman at finding vulnerabilities, and he said that in a post on X on Wednesday. The warning from one of crypto's top security executives comes as DeFi's total value locked has dropped by over $20 billion since the start of the year, according to DeFi Llama data. While some of that reflects broader crypto price weakness, the sector has also been battered by a steady stream of exploits that continue to test confidence in on-chain finance. DeFi Llama data shows that more than $1.1 billion has been lost to hacks over the past year, including April's $292 million Kelp DAO exploit, which exposed how vulnerabilities in cross-chain infrastructure can quickly spill into the broader ecosystem. Solana-based Step Finance, meanwhile, shut down earlier this year after a $27 million exploit left the project unable to recover. Arosa's statements also arrive as Anthropic has warned that its restricted Claude Mythos AI model can autonomously discover software vulnerabilities and develop working exploits at a level the company says surpasses existing automated tools. That raises uncomfortable questions for DeFi, whose core security model was designed around human attackers operating at human speed. DeFi's transparency, long marketed as a strength, could become a liability if machine systems can scan publicly available smart contract code, identify weaknesses, and weaponize them faster than the defenders can patch them. And I've been saying that throughout this entire DeFi debacle. It's sad to see, but he's right. And again, please, if you're in DeFi, get out. Stop chasing that yield. That yield comes from somewhere, but right now, even if you don't know where the yield's coming from, holy shit, you could just lose your entire stack just from a hack. So please punch out. And just to put a nail in that coffin, the last one for today is from James Hunt out of the block. Security researchers flag ongoing stake DAO exploit after attacker mints trillions of VSD CRV. Stake DAO, a DeFi platform, as we just discussed, focused on automated yield strategies, is facing an ongoing exploit, multiple blockchain security firms reported on Wednesday. The attacker has minted over 5.4 trillion VSD CRV on Arbitrum and is actively swapping it for ETH, Blockade noted on X. PeckShield said that so far, some of the tokens had been swapped for 43.78 ETH, worth around $91,000, and has bridged to Ethereum. VSD CRV, or Vote Boosted SD CRV, is a yield-related derivative token tied to the Curve finance ecosystem and used within StakeDAO. StakeDAO said it was aware of the situation and urged users not to interact with VSD CRV. The suspected root cause is a compromised StakeDAO deployer private key, the researcher said. Quote, the attacker appears to have obtained the deployer's private key and set an arbitrary peer for VSD CRV. Using that peer, they forged a malicious message that triggered unconditional minting of 5.44 trillion VSD CRV to their address, BlockSec explained. The exploit continues one of the worst periods for DeFi exploits, seemingly driven by advancements in artificial intelligence, with dozens of protocols hacked for more than $600 million since April, led by the $292 million exploit of Kelp DAO. Quote, the Stake DAO developer key on Arbitrum was used to repoint the VSD CRV cross-chain bridge configuration to an attacker-controlled contract on Ethereum, and about 25 seconds later, that contract sent a layer 0 message back across, causing the legitimate Arbitrum token to mint over 5 trillion VSD CRV to the attacker, who is now dumping it for ETH. There is no smart contract bug here and no flaw in layer 0. There is one private key, controlling one privilege configuration function with no multisig and no delay between the configuration change going through and the mint clearing on chain, end quote. Karen, who is this person? Hold on a second. Shalev Karen added that the incident highlights broader concerns around operational security and the concentration of privileged deployer permissions tied to audited DeFi protocols. This is going on right now. Yet another hack. I mean, this is not going to stop with DeFi. The only way for you not to be affected by DeFi is to get out Or if you're thinking about getting in, don't. There is nothing about DeFi that has ever been safe, and it is the most unsafe that it has ever been at this particular point of time. Just buy Bitcoin and hold Bitcoin. Do so with your private keys. Don't let a third party hold your Bitcoin for you, because God only knows what their security is like. And is their security vulnerable to an AI attack? And I'm not talking about hacking their wallet. I'm talking about, are they using that Bitcoin? Are they somehow or another, like you give it to Coinbase and Coinbase is involved in DeFi, and all of a sudden some kind of weird DeFi hack happens and that Bitcoin becomes lost because it's tied up in one of these obviously easily hackable AI or DeFi contracts. And then Coinbase comes back and says, well, the funds were not SAFU and you lost your Bitcoin. Sorry for you. Maybe it's so bad one of these days that they don't make their clients whole. Who knows? The best way to not have to ask those kinds of questions is to not have any dealings with it whatsoever. This DeFi shit is going to get worse. It's going to get a lot worse because all this shit is a Rube Goldberg machine. All of DeFi, everything that I've seen in DeFi is like a mirror image of the internal workings of ETH, the Ethereum ecosystem, because it was born out of the Ethereum ecosystem. So remember how the Pope was saying that AI can't help but to take on the values and beliefs and economic incentives of the very people who build those systems? It's the same shit here. DeFi was born out of Ethereum. There's no argument there. Decentralized finance, starting with SushiSwap, was born directly out of the Ethereum ecosystem. So it brought all of the complexity that backs the Ethereum ecosystem over to this thing that's called DeFi, and you're seeing the complete dismantling of decentralized finance. And a lot of that has to do because the attack surface is so freaking large. And the reason the attack surface is so large is because it's all complicated shit. This is why I like Bitcoin. I buy my Bitcoin, I hold my Bitcoin. If I need to make a transaction later on, I do so, and I use my cold card to sign the transaction. I don't put it in staked contracts. I don't turn it into wrapped Bitcoin and put it on DeFi. I don't do any of that. So I don't have to worry about any of this DeFi shit. I don't have to worry about Ethereum because I don't have any. I sleep fairly well at night. The only thing that keeps me up right now is the macroeconomics of the world, because they still affect everything. And all that shit reminds me of Ethereum. It's all complex. Nobody knows what the hell's going on. Contracts are able to be violated all the time. It's a mess. I want simplicity. That's why I like Bitcoin. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.